Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 9th of October. There's been certainly the markets are setting up for this next round of trade negotiations between US and China in the coming days, Thursday, Friday this week. The penciled in days, especially that's going to be important for market sentiment. And the mood music around the potential for a deal is not great. Certainly in recent days there have been moves by the US to restrict access to the US for Chinese companies and organizations. Also creating issues for visas of Chinese officials as well, and that's really sort of put the Chinese backs up to an extent. But on the other side, you've also got China, which is not really looking to engage possibly in a wholehearted manner. You've got the fact that Vice Premier Liu He has not been granted special envoy status, which means that he can't really make any real decisions on behalf of President Xi of China. So this it's a real suggestion that the trade talks are not going to be going especially well, and that's putting a dampener on market sentiment broadly. A little bit of a tick higher today. You had comments from Jerome Powell, the Fed chair, last night, fairly dovish actually, talking about further rate cuts and also the prospect of bond asset purchases by the Fed in order to help the short-term liquidity issues in the States. And that has helped to sort of pull markets a little bit higher today, but I can't see it being overly decisive. And you've seen the dollar a little bit lower as the euro's rebounded, broadly speaking. But yeah, you've seen little real movement on treasury yields as a result. And it's interesting that gold is still higher. And gold tends to be seen as obviously a play against the dollar, but also risk appetite as well. So that's an interesting take on where we're seeing markets at the moment. Now, in terms of data points today, before we get to that, Brexit. Brexit is still obviously a key issue for sterling. Sterling is actually rebounding a touch today. Get that chart back up. Sterling is rebounded a touch as the suggestion from the Irish side is that the two Irish and UK governments are engaging over this negotiation over a Brexit deal, but well, that's seen sterling tick a little bit higher, but nothing decisive yet. Now, today, data points. We've got US jolts at 3 o'clock, expected to be around about where they were last month at 7.35 million. 7.2 now, 7.19 million. So around about where they were last month though. And also we've got the EIA inventories expected to see an inventory build on crude stocks of just over 1 million barrels, and you can see that would be a fourth week in a row of inventory build on the EIA data. We've also got Fed Chair Powell speaking again today, although I suppose he's probably much of the direction has been taken from yesterday's move. And Esther George as well. She is the dissenting hawk on the FOMC, and she speaks at 4 o'clock. Now, my chart today is Euro Sterling. What we saw yesterday was a decisive move higher on Euro Sterling as sterling weakened, and that just basically continued a theme of drifting weakness, but sterling decisively weakened yesterday, and that really took the momentum of this move into strength territory, whereby the RSI above 50 for the first time in 6-8 weeks. MACD lines continuing high, stochastics in strong configuration as well now, so it really did accelerate away above that 89.35 resistance, and not only that, moved the market above 89.75 as well, which had been that reaction high in September. So that move above 89.75 hasn't necessarily been maintained, and the market has just pulled back a little bit as sterling has strengthened or gained a little bit further ground, or regained some ground today. But to be honest, you'd be looking to buy into weakness on Euro Sterling. You can see that through the last few weeks, couple of weeks, where higher lows and higher highs, breakout points, 89.35, that breakout is supportive, And I think any sort of move back towards that is likely to be seen as a chance to buy. I think because the outlook for sterling is broadly weaker. Sterling's actually just jumped 20 pips, 30 pips in the last minute, interestingly. But I would still say 89.35 is a buying opportunity on euro sterling now, as the move continues to look higher, and sterling weakness is likely to continue as the two sides drift ever closer towards a no-deal scenario on Brexit. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.